All right, daily trading review recap for me today on this Wednesday, the 9th of February, 2022. Of all the ways that this day could have potentially gone with this style of strategy that I'm going towards on the future side on the S&P, on ES and MES, there certainly were a lot worse ways that today could have gone. And even today, I'll get to a little bit more after some housekeeping, but of going away from my strategy a little bit and kind of going off the rails, still lucked out a lot. So it was a $100 loss today, but in hindsight, and even in the perspective of had I followed along with my strategy and ended up having to take a bigger loss today if I did that, I still think in the overall perspective of what this type of trading pattern that I'm going for with this volatility aspect trading on SPY through the modality of futures, I really think this is just a minimal bump in the road today on days like this. So I'm going to go over housekeeping first and then go over my intuitions on the day. NASDAQ market internal volume, 20 minutes after the close here, $257 billion volume on the day. That's pretty lackluster. NYSE, $327 billion volume on the day, and OTC is $2.2 billion volume on the day. SPY closing 1.46% in the green. Came into today in pre-market just not being so confident in seeing a volatility aspect because of we having a 1% gap up already in this after hours. And just from the little data that I've been collecting and just trying to get more feelers out and get that experience as much as I can for what the characteristics and sentiment for this S&P 500 is. Just for some reason had that little hindrance of knowing that Monday, Wednesdays, Fridays, I definitely want to start slamming these volatility plays more, looking to play the spread of going both long and short from the open. And just basically identifying whatever percentages on both sides, whether offsetting that more to the upside or less to the downside or vice versa, or keeping it the same on both sides. Identifying those levels and getting rid of the timing aspect of trying to be perfectly long at this time, being directional one way or another, and just going more towards that volatility aspect. These are the days that become the losers that fit that for the percentages that I'm identifying now. Very, very high percentages for this style of trade, but it's these days like this that of course offer really nothing from that open price to get on the short side. You can call it a little bit like a 0.04%, which is what I was taking yesterday, being very, very cautious, still slowly dipping my toe in the water, stepping into this style of trading. So it was kind of funny that I should have flip-flopped those trading styles from today to yesterday to today for what I should have been taking. But I think it's still a great experience nonetheless. And yeah, I mentioned that I came in today with that little bit of intuition. I think it was just a little bit of that gut feeling that for some reason where we're at on the daily, for how many times we have been in this volatility aspect on the previous trading days, it's got to happen at some point. You know, this incredible, great data percentage point that I've found that's very high hit rate, it doesn't stay that high forever. And it's got to come to a halt at some point. And it's just about identifying when that turn's going to be and still maintaining the not being so gung-ho, like absolute looking for a home run every single trade, but just respecting what the market is and saying that it doesn't have no formula, no scientific algorithm is ever going to work 100% of the time. That is the market itself, that is Wall Street, of trying to figure that out and ways to just generate money repeatably, consistently every single day. So I can't expect that with this first little intuition or thought that I have of trying to trade it that way. So yeah, going back to, of all the ways that this could have gone, P&L wise, today was certainly an awesome day, even though today was certainly not an awesome day, but a lot better than some of the other alternatives. And even though I was going away from my strategy that I'll get into of, looking for 0.25% above, 0.25% below today on this Wednesday, we were able to perfectly smack it with this high here that I was able to get out with my long share and thought we were pulling back pretty nicely off there. Thought we were going to maybe set a higher low and then start peeling down to set whatever it wants to do, break below that open price, fiddle around there, and then afternoon session can do whatever it wants to do, go ramp up higher into the close. But also just on this, kind of a support and resistance daily perspective, volume profile perspective, maybe even of kind of identifying these key levels of where we bounced twice off of. This was the end of last year where we topped, July, August, September, topping there. Just we're getting back to that key area, point of inflection. So keeping that in mind with where we're at of, okay, we're getting a gap up to that point. Are we going to have just a trend right through that, or are we going to spend more time traversing through identifying where do we want to go? Because now we're in the thick of it, of this kind of point of inflection, where a buyer's going to be, where a seller's going to be. Also, just another hesitation for me, or lack for me to just put a hard check mark box for me to be so confident in the trade today, was this declining VIX. We're getting sub 20 now, which I do not like to see, just for the volatility aspect, not even because of just going higher or going lower. Just we want to see more dollar volume coming in. We want to see more options plays coming in, pushing price, randomly crazing me for this specific strategy that I'm going for. But that declining VIX certainly does not boast well for a growing percentage gain or try above and below that open price to be trying to go for every day. And it certainly doesn't boast well for that hit rate of that potentially happening even at a lower rate, a lower percentage point above and below going forward in the next few days. But we'll still certainly continue to play it. I don't think I can't take one day or one data point as the overall thesis of a trade or one determinant of a trade that way. But gosh, learning lessons all around, spending a lot of time in front of a frickin' Excel sheet and blowing my eyeballs out. It's just ludicrous what's happening today. So mentioning, of the trouble with this, or the halt that I'm running into with this strategy, is where then becomes the stop for when these types of days come around, when they don't end up producing anything below that open price, and really that first minute candle is your only opportunity at anything. Even if it's vice versa, that's nothing to the upside of that or nothing to the downside of the open price. When then becomes the stop? Because it's still proven, like I mentioned yesterday, of even if we're hitting like a percent below that open price, even if price action drops all the way a percent from that open price, it's still got like a 25% chance of turning green on the day at the close from that open price. So it's so hard of just saying, are you willing to take that much risk, especially with trading through the modality of futures, of take that many points in loss to be able to sustain that? Is your hit rate risk reward enough to match that type of risk tolerance to be able to take care of that? And that's where my trouble really hits, because looking at today specifically, where it was kind of mundane, we're closing, call that like a percent that we were up from yesterday's close, and another 0.5% up today in market hours. I would have been down trading this spread strategy. I'm taking 10, 11 points both ways. So for my long from the open, I'm taking 10 points to the upside, and pretty much that's how it averaged out today. 10 points to the upside, 10, 11 points, and then 10, 11 points to the downside from my short at that open entry price. So then looking, okay, now we're to the upside. We're still using that risk factor of the low. Okay, now we secure that 10, 11 points to the upside as price reaches there. Are we willing to take, as we're closing here, around 20 points? Is that double for how mundane this day was? That it was a trend day today, because we did not see any action to the downside. But of even higher trend days, I want to pull up some charts here that speak a better truth to that type of sentiment in the market. I'm going to pull one up here quick. Okay, so best example for now, December 2nd of 2021 of last year, where we get a crazy day that it had yesterday, but coming into today where the bottom is being put in very low, open to low opportunity, and pretty much all day green day trend sentiment. Has a pullback, dumps under VWAP, probably post-morning session, but for the afternoon session and into close, still holding strong and closing 1.5%, 1.5% in the green from the previous day's close, obviously, but huge amount of risk that you'd have to be willing to take in order to just continue to play out that strategy. And this is a Thursday, of course, so it wouldn't necessarily fit into the Monday, Wednesday, Friday tackle perspective. Lost my train of thought. But just factoring that in of when becomes your stop of how to take off this trade. So that's what we're going through with right now. I think that's all I had on that specific strategy today. That's all I was trading today on that futures aspect. Just wanted to mention a few quick tickers before we ramp it up here. KAVL, that I was also seeing nice multi-day holds setup play today that just continued to ramp right out of the gate, coming into first, second, third, fourth, fifth day today. Not a huge, insane amount of volume on this one, especially pre-markets, but just holding well, not looking bearish, and continuing to just press and press. Any shorts still lingering in this one and producing them some nice price action for the opening market open, and then holding nicely into the afternoon post-lunch session and producing some volatility moves there. In the afternoon power hour sesh there, DCFC, a lot of guys talking about this one in the chat. Huge market cap, plus over $1 billion. 60% day in the green, absolutely insane. It's just hard for me to trade these ones, and I know there's insane amount of opportunity and haltiness and craziness on these types of trades, but it's just I've not done my due diligence, I can say, on trying to pursue these style of trades with this huge market cap and a little bit weirdness of trading for me, especially looking at the first green day. It just turns me off somewhat of just how that fits my personality as a trader, the characteristic of how this thing likes to move, especially for what it did pre-market, for how it was acting before huge volume came in, how it acted after. But yeah, that may be something I need to adapt to if more of these start to show up more and more. CTRM, last one I want to mention, not insanely beautiful or awesome, still that blocky style of printing with that lackluster volume. Dollar volume of the day on this one was 9.6 million, so not anything to bat an eye at, but not insanely ludicrously awesome. Third day play, holding pretty well. Again, similar. That it just wasn't insane, blow your socks off volume, just doging so hard, not really trading anything in pre or after hours, but continuing to press shorts, creating new highs, and continuing to just push and push all the way to 175 today. Pretty beautiful price action for pretty beautiful opportunity for that morning session. On CTRM, and nothing really catching my eye as of right now in the equity market for overnighting or looking at specifically for tomorrow playing. But just keeping our nose to the grindstone, getting after it every single day. I'm thankful for the opportunity. That is all I had. I sincerely thank you guys for watching. We will catch you guys on the next one.